Today, another example for preparation of cost sheet. Here we have the information from the books of Mrs. ZYX Enterprise. The following details have been extracted for the year ending March 31st, 2030. Here they gave details for a year. So here they have stock of materials, opening and closing. Opening is 1,88,000, closing is 2 lakhs. So they have stock of material, and they have purchased material during the year, that is 8,32,000. Direct wages they have paid, that is 2,38,400, and they have indirect wages which are related to factory, those are 16,000, and salaries to administrative staff, so 40,000. Freight inward is 32,000 and outward is 20,000. They made sales of rupees 15,79,800 in the year which is ending 31st March. And they have allowed cash discount 14,000, and bad debts written off, that is 18,800, and they made repairs to the plants and machinery. Those expenses are 42,400, and they're paying the rent, rates and taxes. So they are running their enterprise in a rented building. Factory, they are paying 12,000. They are also maintaining office in the rented building, that is for that they are paying 6,400 rupees. And traveling expenses are 12,400. Salesman salaries and commission, those are 3,600. And depreciation written off on plant, that is 28,900. On furniture, that is 2,400. And they are paying direct fees per year 24,000, and electricity charges of factory, those are 48,000, and fuel for boiler, those are 64,000 rupees. They sold scrap though for 500 rupees, and general charges are there 24,800, which are related to office, and manager salary, that is 48,000. Here they have given another additional information to facilitate preparation of cost sheet. That let's see the information. The manager's time is shared between factory and office in the ratio of 20:80. So here they are asking to prepare the cost sheet for the year ending 31st March 2013. Let's see how the cost sheet will be. Here the cost sheet, we have a particulars and rupees. So they have opening stock of material as we seen in the information, that is 1,88,000, and they made purchases of 8,32,000 in that year. And we have to take the freight inwards in the materials, and that is 32,000, because this freight incurs when the company purchasing something into the company. So that's why we have to take those expenses as prime expenses. Comes is 10,52,000, and from that to get the material consumed, we have to deduct the closing stock of material, that is 2 lakhs. So after deducting it, the material consumed is 8,52,000. So to get the prime cost, we have to add the direct wages, which are 2,38,400. So together all these are becoming as prime cost, that is 10,90,400. And to get the factory cost, we to add the factory overheads. The enterprise has factory overheads too. So indirect wages they are paying, that is 16,000, and repairs of plant and machinery, that is 42,400. So factory rent and rates and taxes, those are 12,000. Depreciation of plant, that is 28,900. So here electricity charges are 48,000 they are paying, and fuel 64,000 to run the boilers. Here manager salary is sharing between factory and office as 20:80. So here we have to take the 20%, and so this 20% will be calculated on the total, those that is 48,000. So after calculation, we are getting 9,600 is the manager salary, which is related to the factory, and together all these 2,20,000 is the factory overheads, and the sale of scrap is deducted from this. So after deducting it, 2,20,400 is the factory overhead, which is added to the prime cost to get the factory cost. So after adding it, 13,10,800 is the factory cost. So to get the factory cost of production, we have to add the administration and office expenses, which are called overheads. So salary to the administration staff, that is 40,000, and office rent and rates and taxes are 6,400, which they are paying. And depreciation of furniture, they have 2,400 per year, and directors fees, that is 24,000. Here there are some general expenses which they have paid during the year, those are 24,800. And manager salary after dividing, apportionating 20% for factories. So here we have 38,400 for the office. So all these administration overheads total becomes 1,36,000. So these are added to the factory cost to get the cost of production. Those are 14,46,800. And to get the cost of sales, selling and distribution overheads are added. So here they have freight outward, which is related to the sales. So that's why we are taking it here. So which occurs when the final product is transported from factory to warehouse or to the consumer. So freight will be paid on that transportation. So that is 20,000, and traveling expenses they are paying to the staff, that is 12,400, and salesman salaries and commission, that is 33,600, and they are writing of bad debts, that is 8,800. So here total becomes the 84,800, and this is added to the cost of production, that is 15,31,000 is the cost of sales, and they made sales of rupees 15,78,000 during the year. So the cost of sales is deducted from the sales to get the profit. So after deducting, we are getting 48,200 is the profit for the year 2013 for the company of ZYX, Mrs. ZYX Enterprises. Here we have another example for preparation of cost receipt. This is little bit different from the previous. And E Limited furnished the following information for 10,000 units of a product manufactured during the year 2013. So here they have they had materials for production of 10,000 units 90,000, and they have paid direct wages 60,000, and power and consumable stores are 12,000, and indirect wages those are 15,000, and factory lighting, that is 5,500, and cost of rectification of defective work, that is 2,000. That means maybe they are conducting the audit in regular intervals. And clerical salaries and management expenses are 33,500 for 10,000 units during the year of 2013. And repairs, maintenance and depreciation of plant, that is 11,500, which they have paid for 10,000 units to produce 10,000 units. And they are giving the additional information which will help in preparing the cost sheet. The net selling price was 31 rupees 60 paisa per unit and sold, and all units were sold. So there is no any closing finished goods. So they sold 10,000 units during that year. As from 1/1/2004, the selling price was reduced to 31 rupees per unit. That means they have reduced to 60 paisa per unit. And it was estimated could be increased in 2014 by 50% due to spare capacity. So the production can be increased due to this spare capacity. So rates for materials and direct wages will increase by 10%. And they are asking to prepare cost sheet for the year 2013 showing various elements of the cost per unit and estimated cost and profit for 2014. Assume that 15,000 units will be produced and sold during the year, and factory overhead will be recovered as percentage of direct wages and office and selling expenses as percentage of works cost. So let's see the preparation. And here is the cost sheet for 2013 with according to the given information. Particulars, we have rupees and cost per unit inner column, cost per unit outer column. So here materials, they have consumed 90,000 to produce 10,000 units, and wages they have paid to produce 10,000 units in the year, that is 60,000. So here the prime cost is 1,50,000, and they have factory overheads, power and consumable stores 12,000 rupees. So I forgot to tell you that materials cost per unit is 9 rupees and wages cost per unit 6 rupees. Together prime cost is per unit is 15 rupees. And now let's see the factory overheads. Power and consumable stores 12,000, which is 1.20 per unit. And factory indirect wages they have paid 15,000, which is 1.50 per unit. And lighting and factory 5,500 they have paid 2,000 in 2013, and the cost is per unit is 55 paise. And effective work which is identified, they have paid for the identification 3,000, and the cost per unit is 30 paisa. And plant repairs, maintenance and depreciation 11,500. Together all these 47,000 rupees is the factory overheads, and they have sold scrap for 2,000 rupees, which will be deducted. So after deducting, the total factory overhead is 45,000, and which is 4.50 rupees per unit. And works cost becomes 1,95,000, and it costing 19.50 rupees per unit. And cost of goods sold is calculated by adding office and selling overheads and clerical salaries and management, that is 33,500. So it is costing 3.35 paise per unit, and selling expenses are there 5,500. So this total becomes 39,000. So which is costing per unit 3.90. and together by adding this, the cost of goods sold is 2,34,000 and it is costing 23.40 per unit. So they sold all the units. So 31.60 is the price. So from 31.260, 23.40 is deducted to get the profit, that is to 8.60 per unit. They have profit of 8 rupees, 8.60 rupees per unit, which is 82,000, and the total sales are for 2013 is 3,16,000. Now, preparation of estimated statement for 2014 cost and profit. So, calculating the cost of sales and profit. So, here they told that they will be producing 15,000 of units in 2004. So, here materials. So as we calculated the 9 rupees per unit, so which are multiplied with the 15,000, and they are saying that 10% of price can be increased, could be increased. So here so after adding 10% of increase, so here 1,48,500 is the materials cost in 2014, and the cost per unit is 9.90. And wages, so we are calculated 6 per unit, so these are multiplied with the 15 units which they are expecting or estimating to produce in 2014 year. And here also there could be a 10% hike in the purchase in the wages. So here that becomes 99,000, and 6.60 is per unit cost for wages in 2014. So the total prime cost is 2,47,500, which is costing 16.50 per unit. And overheads, so factory overheads are 75% of wages. So from 99,000, here we have to take the 75%, that is 74,250, which is costing 4.9 paise per unit. So here together to get the works cost 3,21,750, and which is costing 21.545 paise per unit. And so office and selling overheads are 20% of workers. Here we have to take the 20%, so 3,21,750 into 25%, if we calculated, so 64,350 is the office and selling overheads for estimated 2014 to produce 15,000 units, and that is 4.21 paise per it is costing per unit. And together 3,86,100 is the total of cost of sales, which is 25.74 paise per unit, and they are reduced 60 paise per unit cost. So here the total cost per unit is 31 rupees. So from 31 rupees we have to deduct the 25.74 paise to get the profit. So that is for 5 rupees 26 paise, but they are having the profit, which is and the profit in rupees, they have 78,900 is the profit. So compared to the 2013, the sales increased but the profit is decreased because they have reduced 60 paise price per unit. So they were having 8 rupees per profit per unit. Here they are having only 5.5 rupees 26 paise profit per unit. So this is the preparation of estimated cost and profit for the 2014 according to the given information. So this is another method, or the sometimes company will try to estimate their sales and costs for the future also. So those are possible with the preparation of cost sheet, taking one by one step